Riots and protests over inequality and a rise in the retirement age have rocked France in recent weeks, but that hasn't slowed down France's premier luxury brand. LVMH, a maker of Louis Vuitton and Dior products that retail for tens of thousands of dollars, saw its revenue increase by 17% in the first quarter of 2023. A post-pandemic rebound in demand in Asia helped boost the figure, along with more sales in Japan and Europe. The US remained a weaker but stable part of LVMH's balance sheet. Overall, the company pulled in $23 billion in the first 3 months of the year. The company's CEO Bernard Arnault recently overtook Elon Musk to become the world's richest man. For more on this now, let's go to Lvhm Otunuga, Senior Research Analyst at FXTM in London. Thank you very much for being with us today. So luxury brands are always resilient amid uncertainty. And how defensive are these stocks with respect to recession risk, I wonder?
Yeah, we've seen how luxury brands have used their prestige, reputations, and pricing power to, in few ways other brands can. And there's two key factors why. Because I think these goods tend to retain their values in times of uncertainty. Another, because the exposure to high-income consumers with a lot of disposable income who are happy to pay a premium. So these consumers are not necessarily recession-proof, but they can weather the storm. We just need to look at the year-to-date gains of LVMH, Kering and Hermes, above other luxury brands to see how these luxury brands have really performed and quite defensive to the recession risks.
Interesting, Lvhm. And inflation has also eased to its lowest level in 2 years. How is this going to support equity markets going on? Because the Fed minutes yesterday actually showed that the Fed is now worried that there could be a mild recession in the US nevertheless.
Yeah, yesterday was a really late night for me. So it's the devil in the detail. We saw that US inflation eased to its lowest level in nearly 2 years. But, the core actually, ticked slightly higher, meaning that this reinforced market expectations that the Fed will most likely raise interest rates once more in May before starting to cut in September. In fact, money markets are predicting a 60% probability that a rate cut will happen in September. Ultimately, this is good news for equity markets. Equity bulls are going to cheer on this, especially the Nasdaq 100, which is sensitive to rising interest rates because many of them are valued on projected profits in the future. In regards to inflation expectations, we saw that inflation actually peaked last year, and there's a possibility that inflation could continue following a negative trajectory, but we need to keep in mind the OPEC shocker 2 weeks ago and how commodity prices are going to trade moving forward. But overall, it looks like most central banks are going to pivot, and we could start expecting rate cuts, in the second half of 2023.
Now we have to leave it there, but thank you very much for your analysis, Lvhm Otunuga. And now let's go to other top stories from around the world. Chinese exports have surged for the first time in 6 months in March, thanks to higher demand from most Asian countries and Europe. Shipments abroad unexpectedly jumped 15% from a year ago, after falling 6.8% in the first 2 months of the year. Meanwhile, imports fell 1.4% during the same period, resulting in a trade surplus of $88.2 billion. SoftBank Group has reportedly dumped almost all of its remaining holdings in Alibaba, further limiting its exposure to China. According to the Financial Times, the Japanese conglomerate has sold $7.2 billion worth of Alibaba shares this year, cutting its stake in the Chinese e-commerce giant to just below 4%. Shares in Alibaba tumbled as much as 5% after the report. And lawyers of FTX have said the bankrupt crypto exchange had recovered more than $7.3 billion in distributable assets. The figure marks an increase of more than $800 million since the beginning of the year. FTX, which was valued at $32 billion a year ago, filed for bankruptcy in November after a wave of withdrawals. And that's all from Business for now.